So our approach for 2017 is going to be quite different to the approach we took in 2016. We still felt the market had legs in 2016. We were becoming increasingly cautious about bonds. As it were, bonds peaked in the autumn and have started to decline subsequently. We're staying pretty clear of the long bond market. That's a little risk because if interest rates suddenly take a big turn downwards and bond prices shoot up, we're not going to collect much of that. But we will avoid any carnage in the bond market, and with unemployment low in places like Germany and the UK and the US, there is now more scope for inflation because you haven't got a lot of unemployed people to throw at an increasing demand for goods. So if demand goes up, it's very difficult for Germany, the UK and the US to respond to it, and to up productive capacity through investment takes a while. So that could be an issue for the bond market. The equity market we think will be wobbly, much more wobbly than it was in 2016. We think it's good value over the long term. We think long-term investors staying out of equities have got to put their money somewhere else, and where do you put it? Cash yields less than 1%. 10-year bonds yield something between 1.3 and 1.5%. It's not very attractive when inflation is on the up. So equities still offer that better long-term protection. What we will do this year is look to secure better protection on the portfolios in the form of put options when we can buy them, when they're not hellishly expensive, which tends to be when expected volatility is lower. And I see us doing a lot more of that this year. Now, let's be clear, if there's a major collapse in equity prices, we won't avoid all the carnage. But as we've done previously, we will try and limit it within the client's risk appetite, and we will be a little more cautious this year about retreats in the equity market and try to avoid the worst of them if they occur, without missing the upside if that occurs. So it's a bit of a balancing act for this year. Not going to be an easy year, but then again, that's why clients pay us to take these decisions on their behalf.